Okay, welcome everybody to this afternoon session on base metals. We have a panel of 4 experts here today and about a half an hour to review the entire sector. So first up, I'd like to introduce our experts. On my immediate left is Claudia Tornquist, and she has both an engineering and a finance background. She's the CEO of Dunedin Ventures. Next to Claudia is Brandon McDonald, CEO of Fireweed Zinc. He also has a combined background in geology and finance. Next door is Joey Wilkins, geologist with Aztec Minerals. And last but not least, on the far left is Paul Gill, who's the CEO of Lamico Metals, and they're focused on flake graphite. So graphite, copper, gold, zinc, silver, and lead. Diamonds and copper and gold, maybe a little bit of gold. And then I actually am a silver gold guy. So you got a lot of metals and a lot of companies up here, and we have a whole half hour to explore the sector. The format today is that I have prepared 3 general questions, and we'll just go up and down the panel with each question. And first up will be Claudia. And the first question is, based on the overall outlook for the commodity. So what is your view on the current and future market outlook for your commodity?
Thank you, Brad. Well, Dunedin, my company, is about copper. We explore for copper porphyries. And what we like about the copper market are the long-term fundamentals. What attracted us is the demand outlook. Essentially, everything with green in its name needs a lot of copper. So any green technology, whether it's electric vehicles, whether it's solar, wind energy, is very copper intensive. For example, an electric car needs up to 10 times as much copper as a conventional car. Solar and wind take 4 to 6 times as much copper as coal or gas-fired plants. So if you believe the forecasts of the automotive companies, the energy companies, the governments, of what they all have in store for all these green technologies, then a very large amount of copper demand will come our way, even if you look at it quite conservatively. And if you then look at the other side of the equation, how much supply is there to fill that demand? There isn't very much. The last couple of years have been a downturn in the mining sector, so very little exploration has been done. There are very few discoveries, and the development pipeline is at an all-time low. So most analysts see a quite significant supply-demand gap opening up in the next couple of years of 4 to 6 million tons, and an overall market size of less than 25 million tons. That's a lot, and there will be many projects needed to fill that demand-supply gap, and a higher copper price to make this possible. So we are very bullish on the copper market in the long term, and that's why we are in copper.
Thank you very much. And let's move now to Brandon.
Yeah, look, there are some truisms of the base metal market right now, which is true for copper, it's true for lead, it's true for nickel, et cetera, which is that chronic underinvestment in exploration and development has led to a pipeline of assets inadequate to meet future demand. So in the short term, they've been shoring up the supply side with brownfield expansions, restarts, et cetera. But sooner or later, you need new greenfield projects to meet this demand gap. Now, in zinc specifically, as you saw in 2016 when the Century and Lachine mines closed, you had a sudden crisis in the zinc market, which propelled the price very high. It came off a little bit as Grasberg and a few other mines came online. But what you've done is you've pushed out the crisis. So you've got really probably in about 2024, 2025, you suddenly have a completely inadequate pipeline, even with the most aggressive development assumptions around potential and probable projects. you've got an extremely inadequate pipeline to meet demand, even by the low end of demand, expansion estimates. So when you're looking at a project, as similar to ours, when you've got a big zinc, lead, silver project, you want to say, okay, look, when this crisis hits, are we positioned to capitalize on it? When the boom hits in any given metal, there's always going to be a bunch of would-bes, some pretenders, who will pick up short-term projects with an intent to promote, but the true money is made, for example, in companies like Arizona Mining, which sold for $1.8 billion to South 32, which is a big zinc project in Arizona. That's the position you want to be in, and as one of the larger zinc lead projects in the world, we feel we're pretty well positioned for that. And so, that's the crux of in the base metal story right now. Is it doesn't look good right now. The confluence of the trade wars and specifically very short-term coronavirus has suppressed base metal prices. But if you have an investment horizon beyond 6 months, this is the time when the blood is in the streets, and you should be looking at base metals.
Thank you for that. And Joey, you spent 20 years with a major copper producer. What's your outlook on copper?
Thank you, Brad. Yeah, copper is one of those commodities that, unfortunately, we're kind of reliant on the Chinese to push the market along. With some of the retraction there in China with the recent coronavirus, it's certainly room for short-term concern, but I think, the long-term outlook is very, very bullish, and I agree with Brandon and Claudia that I think this market is very underappreciated, very undervalued, and I think there's a lot of upside potential in both the base metal and even some of the precious metal markets. So if you can cover both in any of your projects, if you have polymetallic projects like we have in Sonora and in Arizona, then it kind of limits your exposure to some of the downturns in different metal prices that can eat away at short-term profits. But I think in the long term, you have to look at the future and know that your projects are going to withstand all those different metal fluctuations. And when I worked for Rio Tinto for 20 years, we constantly looked at a decreasing copper price rather than an increasing copper price. So that really, it sets the bar very high. So you definitely need to set the bar high in any of your projects, and you wanna only go after the best. And yeah, that's pretty much my opinion there.
Thanks, Joey. And Paul, you're the one industrial mineral on the panel here. What can you tell us about graphite?
Well, I think that what we're looking at here, when we look at the macroeconomic trends, is big changes in our consumption patterns as individuals. And the biggest change I think that's happening right now is the electric vehicle coming on stream. I think it's a fascinating time. We're going to see 50% more vehicles on the road in the next 15 to 20 years. That's an amazing amount of material that's required to make the actual lithium-ion batteries. There is over 100 mega factories producing lithium-ion batteries in China that are sucking up demand from a large portion around the world. Here in North America, we've had a very interesting secular event in which there's an agreement between Canada and the United States on supply of critical metals, and graphite is quoted within that, as well as lithium and cobalt and a number of other ones. So that's about creating a supply chain within North America for the to supply electric vehicle batteries. So it's a very big trend, I think, here in North America to get out in front of. There is a wave coming, and as an investor, I want to be in front of that wave. And I think the big factor with graphite is that there's 15 times more graphite than lithium in a lithium-ion battery. So if you're thinking copper as well, think about graphite, because there's about 150 to 200 pounds in the average vehicle that's electric. And that's going to be very significant in the next little while. Thanks.
Well, thank you very much, everybody. And one of the common themes that I heard is that the new wave of alternative energy and the electric vehicle will actually have a pretty significant impact on the base metals. Our next question has to do with how you're preparing your companies to participate in the next commodity cycle. Clearly, commodities are cyclic, and gold and silver have already started the next wave. We saw the first move last summer. Base metals are pretty much still in the basement, though. And so I think it's early days yet for the base metals, and yet if you look at history, base metals always follow the lead of the precious metals. So starting from the far end with Paul, how are you preparing to create shareholder value given our outlook for graphite?
Yeah, this is the right time to be in the market and developing mines that are going to be supplying the electric vehicle market. And what we're doing in Quebec is that we've set up an exploration operation right now that is near the Port of Montreal. That's very important for base materials and industrial materials to have ports nearby. It has also a major producer called Imerys nearby as well, so the infrastructure is there. We've drilled over 170 drill holes into the project and have produced one 43-101 that defines what's in the ground to some extent, and now we're going on to our second 43-101 and a preliminary economic assessment. And that assessment will allow us to put a real idea of what the value of the project is. And so it's exciting times, and we think by 2022, 2023, demand will increase for this particular material, and we'll be ready. Thanks.
Joey, value creation at Aztec.
Thanks, Brad. Yes, I think when it comes to specifically Aztec Minerals is, and with some juniors, I think you want to focus on jurisdiction, where you're going to put your or look for your projects. And with us, we've chosen the Americas, specifically southern Arizona and northern Mexico, where there's already existing mines all around us on all of our projects. We think we've got the right recipe for finding and discovering new deposits. So it's important to create a tier when you're looking at your projects and how you're going to evaluate and where you're going to look. So if you're not in the right spot, you could have a great deposit in the wrong spot, and you're never going to mine it. You're going to see these problems occur worldwide in different difficult places to work. Pakistan, for example, Barrick and Antofagasta found billions of tons of copper and gold, but they can't mine it. And then the Chinese came in and stole it. So that's a glaring example. But I think you want to be careful where you explore. So I think that's where we take the proactive approach and look for deposits and projects in safe jurisdictions.
Thank you. And Brandon, zinc in the Yukon.
Yeah, look, when the market comes back for base metals and we have a buoyant, ideally even frothy market would be the ideal time for an exit for a company, right? The question is what maximizes your chance of an exit. Typically, it's readiness for a project. A mid-tier major, their horizon ideally is as prompt as possible. If they can buy a project that is fully permitted and shovel-ready, that's fantastic. If they can buy one that's a couple of years out, that's also great. If it's 6-7 years out, that's a bit of a challenge. So what we try to do as Fireweed Zinc is make sure our project is mature and as large and as mature and as robust as possible for the next cycle. The challenge is that trying to raise capital at the bottom of the cycle when nobody wants to look at zinc companies, when you're eyeing an exit for 3 or 4 years out, is any base metal company's crisis right now. You've never had better value, yet nobody wants to look at you. We turn to longer term, more patient capital. A great deal of our recent fundraising has been from Resource Capital Funds, which is a large PE fund out of Colorado, very sophisticated mining, private equity fund. We've had investment from Teck Resources, which is the world's 3rd largest zinc miner. So, in these downturns, you have to court the more patient capital so that you can be ready for the upturn. And that's what we're best trying to do. We feel like we have something very special, and we just need a bit of time to gestate it. And then we don't doubt that there's going to be an extremely happy ending to the story.
Great, thank you very much. Claudia, what are you doing? What is your plan to create value for Dunedin?
Well, Dunedin is an exploration company. We are in the business of making discoveries. We have a portfolio of 3 copper porphyry projects. What all of them have in common is we own them 100%. They are large projects with real size potentials. If you know porphyries, they are by their nature big systems, elephant-type deposits. And all of our projects are advanced exploration, so lots of historic work already, lots of copper found already. We're not in the business of finding copper, but of finding more copper. And what are our projects? We have the type of projects in northern BC, in the Golden Triangle, very prolific mining and exploration area. We have a project in Arizona, which is also copper country, which is called Mojave, right next to Freeport-McMoran's very large Baghdad mine. And last but not least, our most advanced project is called MPD. It's in southern British Columbia, not even a 3 hours drive from here in Vancouver, right between 2 of Canada's largest copper mines, Copper Mountain and Highland Valley. And that project we drilled for the first time in the autumn, and we just released the results. We were very fortunate on our 3rd hole. We had a great hit. We drilled a great discovery hole, and have now announced the discovery of a new zone called the Gate Zone. So we're very pleased with this initial result, initial success, and we'll now go on and are already planning our next drill program, which will be bigger, and we'll be back on the ground and drill more and hopefully discover a lot more copper.
Great, thank you very much. In the junior exploration business, value creation ultimately comes down to finding something that somebody else wants. And as you've heard from our 4 panelists, whether it's graphite or copper or zinc or diamonds or gold, those are all not only coming back into demand, there should be, according to Victor Adair, a commodity boom in our future. So our last question today is a little bit more organic. I'm going to ask each of our panelists what they feel their most important catalysts are for value creation this year, 2020. And we'll start with Claudia.
Well, as I said, we're exploring, and we just had a successful discovery and are now continuing to drill. First, we'll do our homework and evaluate all the data, do all the geophysics, do all the painstaking work so we have the best chances of success when we drill. That'll happen once the snow is gone, probably May or June. That will be back on the ground, so that'll be an important milestone and catalyst. And then after that, we'll be back drilling for more in the autumn. That's on MPD, our main project. And at the same time, we'll also start exploration at the second project that's on our list, Mojave in Arizona, and we'll be on the ground there too this spring, starting with some geophysics and then drilling. And there's also a lot of discovery potential there. So it'll be a busy year with lots of drill news and news flows from our end.
Thank you very much. Brandon, with Fireweed.
You know, we're lucky as a company that we kind of have 2 things underpinning the value. First, of the 4 known, zones in the project that contain zinc, lead, silver mineralization, only 2 exist within the known resource, and which we published a study on. So those 2 zones, known as Tom and Jason, together combine for a very substantial zinc lead resource, about the 35th largest in the world. But what's been exciting people was, last year we found some, kind of rediscovered a zone in the west and exhibited some really, really incredible, broad, healthy grade mineralization potential there. So as a company, we're lucky that we have this value underpinned by an incredible resource, but then we also have the blue sky of an exploration project. But having said that, right now in the base metals market, if your investment horizon is 3 to 6 months, which for so many junior mining investors who have the attention span to maybe get across the room before forgetting what they're doing, I don't know if base metal plays maybe are what you want to look at. If you have a portion of your portfolio that your investment horizon is 15, 18, 24 plus months, you're going to do extremely well on any quality base metal story where the management is capable enough not to screw it up. I hope I exceed the bar to do that, so we're going to have very good news flow, but what I'd most be interested in is people in the room who say, okay, look, I am comfortable taking a look at this and parking money there and revisiting it, in a year plus. Trying to satiate the demands of the hot money is I don't know, sometimes it's you rent investors for 2 weeks at a time with your heavy, campaigns of promotion, and it's not necessarily in the best interest of the company. So, we have very excellent news flow, but we're very much focused on the long-term story.
Thanks, Brandon. And Joey, Aztec?
Thanks, Brad. Yeah, Aztec is, fortunately, we're a fairly young company, so we have a very small market cap and small share structure. That being said, we're not very liquid, so sometimes it is tough to get into the Aztec market. But I think we're going to start creating more news flow, and by virtue of the news flow, we're going to start thinking. I think you got to think outside the box a little bit to actually make some of these deposits work. If you follow the herd, you're going to do what the herd does, and that doesn't necessarily always bode well. So I think you gotta take chances. We were in the right jurisdiction, so we've checked a lot of the boxes, but I think we also need to think a little bit differently in order to make that key discovery and to be successful. And I think we've got the right recipe for that.
And last but not least, Paul with Lamico.
Yeah, thanks very much. I'm just thinking about the interesting things that are happening in our society. I mean, there's a lot of people, I think, now that own Teslas, maybe some in this room. I think that's a big change. So when I think about what we need to do as Lamico, we need to define our deposit and our economics for our project to make sure we can fit into that supply chain in North America. We know it's there. We know it's coming. And that's the most beautiful thing about being in a market. And for the last 3 or 4 or 5 years, you can see the trend coming. And we are here. I congratulate you all for being in the room because you're ahead of the trend. That's what we're here for. And we're getting ready to really supply a market and build a project that's going to create a lot of wealth for people who are in this particular industry, whether it be copper or zinc or graphite. And I'm especially fond of graphite, I might say. It's the dark horse of the materials industry. I just had to get that out. Thanks very much.
Great. So we do have a couple of minutes, and so we can take some questions.
For Claudia and Joey, with the green ventures providing a big market demand, will green recycling programs for copper or other minerals be a significant source of supply that might mitigate or moderate copper pricing?
So the question is if recycling of copper from green projects impacts supply and therefore copper pricing. Claudia?
It's a very good question. The copper supply is always partly newly mined copper, partly recycled copper. The recycled copper share is growing, but even if you take quite a lot of growth into account, if you look at the equation and look at the demand side and what's needed to build all these cars that Tesla or all the big car companies have on their plans, you need a lot of copper, and there is still a big gap. It's 4 to 6 million tons out of 25 million tons market size is what I've just recently looked at for what Wood Mackenzie, very respected forecaster, had, and yeah, that is significant. You need higher prices to incentivize new projects to fill that gap.
Thank you.
Joy?
Yeah, I think that's a really interesting question, and it's not really being brought up. Is how do you recycle some of the future green energy products that are going to be streamlined for the next 15, 20 years? What do you do with these old Teslas? What do you do with these old wind turbines that require a massive amount of copper? And I think there's definitely a market there. That's certainly something to think about. It's probably on the on the far horizon, and we really can't take advantage of that right now. But you got to be cognizant of that when you're looking at your commodities and work that into the equation. Yeah, it's an excellent question. Thanks.
If I could, I'd like to extend that question to graphite, because I'd like to know if graphite is recyclable.
I don't think there is any recycling of graphite right now at this point, so it's very interesting. It's something that hasn't been contemplated simply because the pricing of getting new graphite into the market is so cheap. There may be in the future. That's something that I know lithium is recycled. Rare earths are certainly coming along and need to be recycled. You need to do that. But yeah, I don't think we have a graphite recycling program right now.
And I can comment on silver. Silver scrap supply has fallen with the low prices. In other words, scrap supply is price elastic. Low prices, it stays at home. Higher prices, people sell their silverware. But in terms of industrial uses for silver, it's only the largest ones, for instance, solar photovoltaic panels, that have enough silver to be worth even considering recycling. And we're so early in the solar photovoltaic cycle that it's hard to envisage any photovoltaic recycling for at least 2 decades. For instance, every electronic product, like my cell phone, has a little bit of silver. This has between 1/4 and 1/2 gram of silver. But silver at $17 US, we're talking about 1/60th of $17 is the silver value of this phone. It's just not enough to recycle. So we don't see much in the way of industrial recycling on silver either. We do have time for 1 or 2 more questions. So I think, Brandon, you're the one who touched on the investment choices in the sector. I'd just like to point out that I think 2 of the 4 panelists are already reporting resources, Lamico and Fireweed. The other 2 are basically earlier stage explorers. So when it comes to looking at your portfolio, if you want exposure to base metals, there's several ways to do it. You can buy copper ETF, zinc ETF, et cetera. You can buy the major producers. I will point out that the traditional investment thesis of buying large mining companies is rapidly fading because of the emergence of the ETFs. And large mining companies used to offer, I think, 3 things. They used to that you couldn't get from the product itself. They used to offer leverage to the rising price of copper, lead, zinc. They could offer organic growth, producing more and more copper, lead, zinc each year, and they could offer rising earnings. And those 3 things were the reason why you wanted to own a major mining company versus the product, the commodity. But with the capital cost overruns in the base metal sector and the underperformance in general of the larger companies, those reasons are rapidly fading. And so then you look down to the next, the junior and mid-tier producers, where you still have some growth, perhaps even more growth, and they can actually deliver. If you go down then into the developers, they have resources, and just making an economic decision to build or finding somebody to buy is also a real catalyst to create value for junior stockholders. And last but not least, kind of lowest on the totem pole, but with the highest risk, but also the highest reward profile, are the junior explorers, where literally it's a treasure hunt, and you're out basically using your shareholders' money to find buried treasure in the hopes that ultimately it will be something of great value. For instance, in the case of Aztec, and I'll give a disclaimer, I'm the founder and chairman of Aztec, but in the case of Aztec, we're solely focused on elephant-sized deposits because we need that risk-reward ratio in our favor. If we find what we're looking for, we're not looking for a 2-bagger or a 5-bagger or even a 10-bagger. So that's the whole thesis of elephant hunting. 2 minutes left. 1 more question?
Can I just comment on that?
Yeah.
Yeah, so you're talking about ETFs, and ETFs have drawn a lot of money away from Juniors, among other things, people are less and less investing or choosing their own, the stocks in their portfolio. And the siphoning away of this capital has taken what were assets in junior mining already mispriced and mispriced them even further. I would think that if you have a portion of your portfolio that you intend to speculate, you want to target companies that are too small for ETFs, because this is where your real torque is, right? By the time something is large enough to be in an ETF, the funds are in and the pricing it's fully priced. Not to say that there isn't an opportunity there, but it's far less likely to be fundamentally mispriced, right? So I think dedicating your entire portfolio to junior mining would be a debatably sane move. I think it's usually just us in the industry that do that sort of stuff, but when you have a portion of your portfolio that you're looking at these quality, these assets that are too small for ETFs, that's really where you get your outsized returns.
Great. I'm going to make that the final word because we have run out of time, but thank you panelists for participating and thank you all for attending.